We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelming on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Chris Grove, President, CEO of Commerce Resources. Chris, thanks for joining me today. How are you?
My pleasure, Tom. Good to see you again, and I'm well. Thank you very much for asking.
So, Chris, it's always interesting to speak with you. You know, you and I talk about something that, unfortunately, I think doesn't get enough weight added to it. You know, enough conversation about it. And this is the topic of rare earth elements. You and I have talked many times about the updates to, this industry, to the main mega player in this space, which we'll get to. But why don't we start by talking a little bit about China's new announcement in this space? And just to remind listeners, if they want to go back and listen to our previous interview on this topic, we really dove really deeply into how much of it China really controls and what all these metals are used for. So give us an update on what has happened now and what this catalyst means for the industry.
Yeah, absolutely. I really appreciate it, Tom. And so the recent announcement from China that they were halting exports of germanium, gallium, and antimony to the United States is kind of a shot across the bow of the United States, in so much, first off, germanium, gallium, and antimony are not rare earth elements. They're all rare metals, but they're not specifically rare earth elements. However, when Donald J. was president previously in 2019, and he was so active in saber rattling on trade with China, that's when Beijing, in May of 2019, essentially was interpreted as having made the suggestion that they may halt shipments of rare earth elements to the United States. And there was a little bit of a flurry of interest, excitement, anxiety, significant anxiety, I would say, by some entities about the cessation of rare earth element shipments to the United States. Where we are right now, and we're 5 years later, little has changed in terms of the global dynamics of supply and demand. And yes, China is still the dominant player in rare earth elements. However, the Biden-Harris administration has actually been potentially more proactive in terms of looking to specifically finance a vertically integrated rare earth element supply chain. And this is expressed through things like the Inflation Reduction Act in the United States, and then also recent investments under the Department of Defense, specifically their new financing mechanism, which is called the Defense Industrial Base Consortium. And so back in June of this year, the Defense Industrial Base Consortium, and for the future now, let's just call it the DIBC. Americans love those acronyms. And so the DIBC was announced as having an invested total of $17 million USD into two Canadian critical minerals projects. And those two companies also got then matching funds from a financing arm of the Ministry of Natural Resources that I had not known about before, called the Global Partnership Initiative. In conversations following that with the Ministry of Natural Resources, I was informed that really any Canadian company that got a commitment of capital from a foreign government, the United States, the UK, the European Union, or an OEM from any foreign country, they could then expect to get matching capital from Canada through this financing arm, the Global Partnership Initiative. So Commerce Resources did submit a white paper application to the DIBC in September just passed, and we have not yet heard whether or not we're successful in that. However, interestingly, and hopefully I'm not getting too far off of point here, Tom, but I was at arguably one of the most important rare earth element industry conferences in Washington, D.C. in October of this year, and I did meet two of the analysts who are reviewing these white paper submissions for the DIBC. And we did have very positive conversations about our ashram rare earth element deposit. But to get back to your question, China still is in a dominant position in the rare earth elements. And this leads us, and thank you for the question, this leads us to a very curious situation with the global rare earth element market right now, which is continued increased demand globally, and your listeners will certainly see that reflected in increased numbers of hybrids, electric vehicles, wind turbines, robots, et cetera, all of these designs that require rare earth element permanent magnets. While at the same time, there's been no significant new producers come into the market since, well, really since Linus is the only new one, and they came into production in 2011, 2012. And here's the curious thing, prices are down to around where they were in 2012. And the takeaway, and this is directly from an American associate who is probably the smartest in the rare earth element sector of people who speak English as a mother tongue. He believes that this is firmly a Chinese market manipulation to make life more challenging for anyone else that wants to basically compete with China. And that is certainly true. In a macro basis, low input feedstock prices for the rare earth elements actually also then negatively affects the world's second largest rare earth element magnet producer, which is Japan, which of course Japan historically was the world's largest rare earth element magnet manufacturer. But then China, through specific movements they made, illegal export duty in 2005, et cetera, they have actually managed to dominate the rare earth element permanent magnet market. So Japan is struggling right now in terms of profit margin, even though the input feedstock prices are so low. So at any rate, China continues to exert their dominance over this market. But, this is a chess move at the end of the day on, the trade chessboard. So, China pushes down prices, and arguably then China is seen as a less attractive supplier, even though their production is inexpensive. But it really creates greater anxiety in everybody that is dependent on China at this point in time, and basically inspires people to do more, such as the U.S. government, the U.S. Department of Defense, to create an alternate source of supply. So that's where we are today. And arguably everyone we know and met in Washington, D.C., recently and historically, they do believe that a Trump presidency will pour more money into the critical minerals sector. So we are certainly looking forward to that.
Mm-hmm. Chris, just to kind of reiterate this, China controls something like 90% of the processing capacity of rare earths. Is that correct?
Yeah, that's about correct. I mean, that sounds high. China is still the largest single producer of rare earth element feedstock, but they became a net importer of rare earth element feedstock sometime in 2018. But they still are absolutely dominant in terms of processing. However, to even break that down a little bit, when China imposed that illegal export duty on rare earth elements in 2005, creating what the WTO called illegal, two-tiered pricing system, which the WTO called illegal in 2012, only took them 7 years to declare that. The reality is that in that 7-year period, the largest Western rare earth element processors, being Rhodia, which was then acquired by Solvay, they set up 2 facilities in China to access that lower priced feedstock. So outside of China, you have Solvay with the world's oldest rare earth element processing facility, which was constructed in 1948 on the west coast of France at the town of La Rochelle. And any of your viewers who have ever seen the movie Das Boot, you at the end of the movie, and I'm not going to spoil it, but at the end of the movie, you can see La Rochelle getting bombed to bits. And a big sign, that's where a lot of the German U-boats docked in the Second World War. Well, 3 years later, the world had its first rare earth element processing facility, which was set up by Rhône-Poulenc. And then Rhône-Poulenc was acquired by Rhodia, and then Rhodia was acquired by Solvay. Bottom line is that they don't do a lot of processing in France at this point in time because Solvay does the majority of their processing in China. And so that figure of 90% may include the companies like Solvay that set up facilities in China. Now, having said that, yes, there is capacity outside of China. There's a very interesting company in Nebraska called Rare Earth Salts. There's, of course, the Canadian rare earth element processor, which is Neo Performance Materials, and their facilities are located in Estonia. And then there's the Norwegian company Retec, which I think is near completion of their construction of their facility outside of Oslo. And then, of course, in the United States, you have Energy Fuels, who have a gargantuan facility at the White Mesa Mill in Utah. And then you also have other people looking to become processors like Ucore, MP Materials. And then in Canada, the first potential rare earth element processor of a small commercial size in Canada may be the Saskatchewan Research Council. And, they have been primarily R&D, but they should be a commercial processor sometime in the next year or so. Did that answer your question, Tom?
Well, it did, Chris, but the reason I asked that question is I want to, get your thoughts on if this export ban ends up being a possible catalyst for Western countries to relax or repeal their restrictive mining and refining laws, and what this actual, let's say the lead time or the lag time of having significant refining capacity outside of China, how long that window actually is, do you think?
Yeah, that's a good point. And, certainly statements from both the United States and Canada are about essentially reducing the timelines for projects to get into production. Of course, Canada has the most demanding and stringent legislation for mining in the world. And in some areas, there are 3 required environmental and social impact assessments, a provincial and federal, and that's across the board in Canada. And then in some areas, there's a 3rd one for the municipality that's closest to the asset. But in general, there have been statements about harmonizing these requirements, the ESIA requirements. And there are several companies that are active right now in becoming a processor, besides Energy Fuels, which is already fully active as a rare earth element processor. So continued and anything more from China in terms of restricting exports of rare earth elements or any other critical metals, yes, that should increase government support. That should increase anxiety on the manufacturer side, and it should lead to actually finally a substantive vertically integrated rare earth element supply chain here in North America.
Mm-hmm. So, Chris, but how long do you think it takes? What is that lag time to actually end up creating reasonable refining capacity outside of, or basically creating a facility like that from scratch?
That's a good question, and the one part that is the most difficult to answer is that regulatory process, the requirements for collecting the data on the specific business plan that is put forward by the company. Specifically, you don't typically trigger the environmental and social impact assessment process until you've produced a pre-feasibility study. So a preliminary economic assessment isn't basically seen as accurate enough in terms of the business plan. There's too many variables, and the economic certainty isn't close enough to what your final business plan will be in a PEA. So typically, the ESIA process isn't started until a company has finished the pre-feasibility study. Commerce Resources arguably could be in a position where it's finished a pre-feasibility study by the end of 2025. And then we would enter what would be potentially up to a 5-year process to go through all of the regulatory, the data collection and the hurdles to then apply for a mining permit. So there is that lag. First off, in terms of lag time, finding the deposits and then proving up a resource, and then proving up economics, that could, in good market times, be 10 years, including that regulatory process. It's arguably a little longer now, but that is mostly due to the challenges of raising capital on the venture exchange here in Canada. So the lag time, from today, the part that is difficult to answer as well is how advanced some companies are in becoming a processor, such as MP Materials, as they have stated they are intending to become. And I don't actually know how soon that they'll be able to realize that.
So, if we get into a situation, let's say in the US or wherever it is, where we need more of these rare earth metals that are now, restricted as exports out of China, are there any substitutions that companies can use in manufacturing without these metals?
Substitutions are always being looked at, and but they're arguably being less looked at today with the rare earth element input prices being as low as they are. When the prices were exponentially higher in 2011, there was a lot of work on globally looking for substitutes for the rare earth elements, specifically in terms of manufacturing permanent magnets. And that R&D went on for about 6 years. And if you track the prices, global prices of rare earth elements from 2011 to 2017, you'll basically see nothing but a downtick of prices until essentially the world concluded that there were really no viable substitutes to rare earth elements. And then the prices went up again in 2017 and continued to appreciate for basically 5 years. Mm-hmm. They've fallen off in the last couple of years. But again, as I said earlier, this is considered to be Chinese market manipulation. But some of the markets, some of the designs that were rare earth element dependent prior to the crazy price rises in 2010, 2011, where prices went up as much as 3,000% in 6 months. One sector was phosphors, or the lighting industry. And the lighting industry had used one of the most valuable rare earth elements, europium. And then in that drive for substitutes, it found that there were substitutes for europium in lighting systems. And so lighting is not a big market for the rare earth elements at all right now. All of the other major markets for rare earth elements, they did not find viable substitutes. And to be very clear again to your listeners, the largest markets for rare earth elements are still 2 rare earth elements that are essential for internal combustion engine vehicles. So those would be lanthanum oxide, which is used as a fuel cell cracking catalyst to turn oil into gasoline. And the second is cerium carbonate, which is used to manufacture catalytic converters, both products essential for internal combustion engine vehicles. However, the most valuable market is the rare earth element permanent magnet market, which, is maybe, typified by, the Tesla rolling down the street that uses rare earth element permanent magnets in their motors, in their drive motors, and in all of their small motors as well, whether it's, windows, windshield wipers, etc.
Chris, has recycling ever been a viable option for, creating another, let's say, secondary supply for these elements?
That notion, that idea, that drive is very attractive to everybody. And a lot of journalists and a lot of media have focused on the companies active in doing that. So far as yet, I think that is still challenging for the companies working on recycling rare earth elements. There is a lot of people working on it. I'm not sure at this point in time if those companies have achieved positive economics, but it will be an ongoing process for sure, an ongoing drive. But it has not so far as yet been commercially significant, I would say.
Mm-hmm. So, Chris, if you would maybe speculate or give us your thoughts on the next steps because of this change out of China. What do companies do now if they're restricted from being able to get these materials?
If China did halt, exports of rare earth elements, there are other sources. For example, Energy Fuels right now sources monazite sand material from a few producers. And there's been, over the last 10 years, a huge increase in value of this monazite sand material. There are quite a few ionic clay deposits, rare earth element deposits in countries like Brazil. Brazil has quite a few of them. Chile has some other ones. And so there are other sources of supply that are not yet in the market. There are other sources like the monazite sand that are in the market. And then in terms of hard rock projects, such as the ashram, if China does impose a complete export duty, I would suggest that there would be a considerable increase of capital and government support to get a project like our ashram deposit into production.
Chris, you mentioned many different jurisdictions there. Where are the biggest rare earth deposits in the world right now?
Well, the biggest one in the world right now is Bayan Obo in Baotou, China. And that mine still produces about 40 to 45% of the entire world's supply. So it's an amazing deposit, which, sidebar, is the deposit that our ashram deposit compares most favorably to. Geologically, we're both carbonatites. The majority of hard rock rare earth element, or the majority of the rare earth element market, is produced by carbonatite-hosted sources. So Bayan Obo in China is a monazite dominant carbonatite. Mountain Pass in California is a bastnasite dominant carbonatite. There's another bastnasite dominant carbonatite in Canada, operated by Defense Metals, called Wichita Lake. That's a good asset as well. In terms of other current large producers, then you do have the carbonatite in Australia, which is Linus, and there are two deposits, Mount Weld and Duncan. And then other major sources of supply would be the kind of ionic clay production that China doesn't currently allow because it's environmentally degrading. But that kind of production is coming from northern Myanmar and Vietnam. And your listeners may have seen some of the announcements coming from the government or the military in Myanmar, or the rebel groups controlling some of these assets, about pushing back on price with China. But these ionic clay deposits are typically in situ leached or heap leached, and they're not. It's the kind of production that would not ever be allowed in the United States or in Canada. So there is a fair amount of material coming in from other countries besides China. So if China did impose a complete ban on exports to the United States, really what you're looking at are more, the exports would be on the finished products, which brings to mind specifically At this point in time, the magnet manufacturing sector in the United States is working to be increased very significantly. The largest rare earth element magnet manufacturer in the Western world is the German company Vacuum Schmelze. And Vacuum Schmelze is currently building a $500 million magnet manufacturing facility in South Carolina. And where they are getting their feedstock for that facility, potentially up until there is a viable Western source, they may be supplying that facility with Chinese feedstock. However, the Canadian rare earth element processor, Neo Performance Materials, their primary source of feedstock is from Russia. And because it's considered a critical mineral, there isn't currently a ban on that shipment coming into Estonia from Russia. So there are a few alternate sources right now, but in general, a ban on exports from China would lead to more anxiety and potentially more support for projects like ours.
Mm-hmm. So at this point, it's not a complete ban.
No, not at all. Not at all. China hasn't come out and said they're going to ban rare earth elements. They have said they're banning germanium, gallium, and antimony. And so, I mean, if somebody's got a germanium project in, North America, that's potentially a benefit to them to provide potentially an alternate source. But no, the thinking is that if China may be starting a ban on critical minerals and starting with these three.
Right. Maybe a sign of things to come.
Exactly. Mm-hmm. Yeah.
Chris, I wanted to get your opinion as well, or your thoughts towards what the biggest challenge is for you as you've been CEO of this company for many years here in working in Canada. I want to get your idea or your thoughts on what the biggest challenges have been for you for working within this framework. Has it been, getting approvals, getting financing, working with the TSX? Give us an idea of your biggest challenges within running this company.
Sure. Thank you, Tom. I would say the biggest challenge, certainly over the last 13 years, has been raising enough capital to satisfy the requirements of what is the most demanding and the most expensive mining legislation in the world, which is the Canadian 43-101, which was brought in by Canada in stark embarrassment after the Canadian company Bre-X basically destroyed the resource market for several years. Mm-hmm. And so the 43-101 is a very expensive set of rules and regulations to satisfy for the developing resource company. A lowball estimate to satisfy those requirements would be somewhere north of $50 million per project, and as much as maybe $100 million, depending on the specifics of the commodity, like potash, or where the deposit is located and how much it costs to then define a resource. That can increase the overall capital burden on the company. For us at Commerce Resources, being active in Quebec, which is still, one of the world's best mining jurisdictions, as noted by the Fraser Institute, there's a lot of things that we enjoy in Quebec that other jurisdictions just don't have. We've got government support in terms of a direct capital investment from Investissement Québec back in 2017. And there are certainly very positive, statements from the government that they may find it attractive to finance the construction of infrastructure for a road in our general area, as the government did formerly for Stornoway in 2010-2011 and Glencore's Raglan in 1996-1997. Which then leads us back to your question and the issues. I would say the greatest issue we've had since 2011 and since what is called the repeal of the Uptick ruling by the Toronto Stock Exchange is raising enough capital on the venture exchange. And essentially, it's very simple. If your investors whether they're retail investors or whether they're funds, if those financial entities or those sources of capital do not see a profit from a private placement, well, they're not going to invest in the next private placement. And that's been essentially the major problem for all companies on the venture exchange, not just resource companies, but any other, not yet profit generating company that has been impacted by this uptick of the repeal of the Uptick ruling since 2011.
So explain that to us a little bit more. This Uptick rule or ability for the market to impose a gigantic short position on a lot of these companies is something that I have, tried to book or tried to have conversations about before. But explain to us, how that provides such a headwind and what that rule, initially was imposed for.
Right. Well, first off, it was originally imposed by the Toronto Stock Exchange after the proliferation of other trading platforms. And so, you can potentially go to any financial website. I use Stockwatch, for example, but you can see on any stock, the half dozen or so different trading platforms. And when these came into being, I'm talking about the NEO or the KAIX or CSE, in fact, and all of these different platforms came into being, and the Toronto Stock Exchange said it could not police all of these different trading platforms and could not basically stop all of these companies from shorting, down-ticking stocks all day long. And so they just repealed the Uptick ruling. Prior to March of 2011, you were disallowed from down-ticking a stock with your short position. Now you are not. And anybody has not been prevented from down-ticking a stock all day long because of this repeal of the Uptick in March of 2011. The reality is, or let me say this, the most common statement I have heard from investors since 2011 was, could you stop putting out good news on your company? Because every time you put out a good news release, your share price goes down. And you can see this in the last 3 news releases of Commerce Resources, 2 sets of our very positive drill results on our niobium prospect, which is proximal to the ashram, and then a very positive news on a large locked cycle test on positive flotation results. On all 3 of those news releases, you can see on the day of the news release, you can see the share price appreciate sometimes 30%, maybe more. And then the next day or the day following that, it is shorted back down to below where the stock was prior to that news release on volume. And so what somebody can do, and the most egregious actors in this regard are, with algorithmic trading, the major Canadian banks. And so you can see RBC, CIBC shorting a stock, and basically just how do they cover their short? They short a little bit more. So essentially, they have sold the stock at, let's say 16 cents a share, and then they short enough so that they buy it back at 8 cents a share. They've just doubled their money, basically. Sure, not all of their trades were, doubled in value, but, as they're shorting stock from 16 to 15 to 14 down to 8 cents, arguably they're making money on every transaction. The other side of it is that companies on the venture exchange, with limited capital, potentially over the last, 13 years with, a reduction in their retail investors. And how much capital does any of us have to, basically push back on these major Canadian banks who are shorting your stock every day? Mm-hmm. Yeah, it's just crazy. Did that make sense to you?
I think so, Chris. It's an unfortunate situation and it needs more attention. Do you think that there's any movement in or any recognition by the regulators to know that this needs to be changed?
Well, I hope so, Tom. I am certainly not the only person talking about this. Major, longtime, successful Canadian investors and promoters like Eric Sprott and Frank Justra, and now, Terry Lynch. They've all been screaming about this for years. We at Commerce Resources wrote a letter to the Deputy Prime Minister and the Minister of Finance, Chrystia Freeland, about this in July. We got a response from her office about 2 weeks ago. And I did have a very, I think, substantive conversation with the Consul General of Canada a year ago in New York about this issue. And so I don't know how many people could say that they're unaware of it. So I am going to choose to be optimistic that the regulators are potentially looking at bringing back the Uptick ruling, because honestly, the real contrast is, say, Australia, where valuations for junior companies, whether they're resource or tech or pharma, their valuations are 10 to 50 times what a peer group company is in Canada right now.
Mm-hmm. So how does a company like this, improve their odds of surviving through a market that is constantly against them?
Yeah, that's challenging. I mean, for us specifically, we've seen the benefit of companies getting an additional listing on the Australian Stock Exchange. And so that is an aspect that we have been working on for a year now. Mm-hmm. So we do expect to have an ASX listing, in late Q1 or early Q2 of 2025. And so we certainly are hopeful that will significantly address this issue for us and give us a very positive re-rating due to the Australian resource investors who have significantly profited on resource stocks, for the last decade, whereas Canadian investors have not. So that's one way to potentially deal with this.
Excellent, Chris. Well, I think this is important stuff that needs to be talked about more, needs to be understood. This is certainly something that I think affects the entire mining sector, and therefore, valuations in the space and shareholder and even management teams' abilities to be able to operate and make a profit in this space.
Absolutely. Absolutely. So, I continue to be hopeful that the regulators are doing something about this right now. We understand that the Conservatives here in Canada, Pierre Poilievre, has made some statements recognizing that there are these issues. And so whomever is going to be the government after the next election, potentially the Liberals and the Conservatives are aware of this. And, again, as I said to Tom Clark, the Consul General, a year ago, yes, it is me singing the blues about my company. And yes, I'm trying to advocate for all of the resource companies on the venture exchange. But I said to him, the reality is it's Canada that is suffering now and will continue to suffer for potentially generations. Because on the one hand, Canada, again, has the most demanding mining legislation in the world. And on the other hand, if companies can't raise the capital to satisfy that 43-101 legislation, it's going to be a stalemate situation, and Canada will not be able to be a resource-based economy again. And so, he took that comment very seriously and suggested several possible bodies that should get active in this. And as I said, we wrote a letter to Chrystia Freeland. We will write and send out some more letters to other provincial and the other regulatory bodies, CIRO, et cetera. So, I will continue to be optimistic on this.
Excellent. Chris, is there anything else that you're paying attention to or really looking forward to as we kind of go into the end of the year here?
We are excited here at the company about the imminent completion of our updated preliminary economic assessment on the ashram. We released very positive economics on the ashram in 2012. And due to these issues of raising capital, we have been very challenged to then update the economics at all. So ideally, we will also have out in early 2025 an updated preliminary economic assessment, which includes all of these significant optimizations that we've achieved over the last 12, 13 years. So I'm very excited about that. Besides that, and as I mentioned earlier, we did make an application to the Defense Industrial Base Consortium, the DIBC. We're certainly optimistic about that. And then we also applied to the Canadian government's Critical Minerals Infrastructure Fund back in February. And just a couple of weeks ago, we were sent a list of questions that they wanted much more detailed answers on. And so we sent those back to them. So we're keeping our fingers crossed on both of those potential grant opportunities from Canada and the United States.
Excellent. Chris, is there anything that you'd like to leave our listeners to think about or to consider before we wrap up here?
Well, the final thing I think, Tom, for anyone that has looked at the company before, is I did step back as CEO at the end of July of 2024 in favor of an incoming CEO, Ross Carroll, who has major mining company management experience. And so Ross was last the CFO of a +$1 billion Australian mining company. And my feeling was very clearly that with our excellent rare earth element asset and the interest expressed by everyone in the Western world for us to be in production and to supply them with product, the major challenge we have is the infrastructure build that we would need to get our material to market. And I did feel very strongly, and still do, that someone who had management experience of running a +$1 billion company would be better able to make a compelling case to Quebec or Canada that this asset essentially deserves government support to get the project into production, which doesn't have a 10-year mine life. At the current defined resource, which we updated in May of this year, we have the ability to produce 10% of the entire world's market of rare earth elements for just around 80 years. And so, it's a generational asset. And so I'm excited that Ross Carroll, the new CEO, is leading the charge. He and I had some very substantive meetings with the Quebec government just 3 weeks ago in Quebec City. So I'm very excited about the possibility that the new CEO of Commerce will be able to lead us to the promised land.
Excellent. Chris, thanks so much for explaining all of these things to us today and, really shedding light on a little bit more of the inner workings of the TSX and the challenges that these companies face within them. For anybody that wants to know more about your guys' company, that's all available at commerceresources.com, as well on Twitter, Commerce, RESCCE. Chris, as always, thanks so much for your time today.
My pleasure. Thank you, Tom. Great to talk to you again.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.